You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. It is Tuesday, June 16th, 2020. Thank you for joining us. We are #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate. I'm filming this at about 7:30 in the morning and just checking on what's been going on in the podcast. We've already got 50 downloads today, and that doesn't even include YouTube. So you guys rock. Thank you for contributing when you send messages. We've got people now reaching out to us asking for guest appearances and some big names too. And so I'm so excited to be able to continue to share what's been going on in the Toronto real estate market as I myself am learning as things evolve. And in the last 24 hours, evolved they have. It's like Pokemon in here. Check this out. We're going to start off talking about CREA, the Canadian Real Estate Association. They have put out their home sales findings over the last month. I want to ask the question, are they rising or falling? If you just read the headlines, it is very confusing. We have some very critical perspectives. And so I want to look at those as well as balanced perspectives on what's been going on. And then I've been receiving a lot of messages from viewers that the CERB, the CERB, is going to be extending. We don't know all the details, but we know that that's the case. And absolutely, I have already got it penciled in. I was going to cover it today. That is big news. And it also is a bit of a fulfillment in some of the predictions that we've had. We'll talk about that. And then as the GTA begins to reopen, what is happening in our marketplace? And are we actually included? As you've probably heard, Toronto and Peel and Windsor, I believe, is the third one, are not included in this reopening. What is that going to look like? So we're having some great fun. We're learning a whole bunch of stuff. I had a conversation yesterday with a friend of mine, as we've an acquaintance, a fellow business person who is contemplating selling a unit. And she was asking the difference between kind of a local agent versus someone who tracks the overall market, kind of like we do here. And really the way I like to describe the difference here is kind of like if you wanted to go to a boxing match, and a boxer would be your local realtor. It's great. It's lots of fun. They throw some great punches. They can take a bunch of punches. But when you put them in the ring with a UFC fighter, someone who is educated in multiple skill sets, it is not a fight. As soon as they grapple them, it is a slaughter. Can you say Brad's lamb? Speaking of stain, I need to stain my deck today. It's supposed to be a beautiful day, and apparently not supposed to do it in direct sunlight. So we got to wrap this podcast up, get you guys all the good stuff so I can go out and get that stuff done before the day reaches its apex. Okay, we got some fun stuff. We're going to start off talking about home sales. Now, can't miss over what Better Dwelling said. And I've actually noticed, originally when I read this article, I thought, you know what? They're being super critical, as they always are. This is a problem with Crying Wolf. Speaking of slaughtering lambs. When you're so negative all the time, you instantly assume they're just being negative. But there has been some news in the more balanced perspective. There has been people that are a little bit hesitant still. And I don't think it's ill-founded. I don't disagree. And so this article, the heading comes off really rough. And that's what kind of threw me off too. So check out this heading from Better Dwelling today. Canadian home sales fall over 39% with Toronto leading the market lower. If you were just to read that, and that was the top article of everyone reporting what CREA had to report in the last 24 hours. That's rough. That's rough. This is what the article says. Canadian real estate sales aren't falling as much as the month before, but remain substantially lower. The Canadian Real Estate Association data shows home sales fell in every major market in May. The decline in sales was smaller than the month before, but still remains at one of the lowest volumes in decades. Even CREA reminded the industry just a third of the volume returned from pre-pandemic levels. So when we look at the Canadian real estate market, it dropped over 39%. There were 33,051 home sales in May, which is up 60.2% from the month before. Monthly increases are expected, but annual declines are not. Okay, first of all, what? Monthly increase, when they say monthly increases are expected, but annual declines are not, when we've just seen this massive drop year over year, what are we supposed to be expecting year over year for the next month? Are we expecting it to rebound way up the way again? No way. There's too many ways about it. That's a silly comment. I don't get it. Monthly increases are expected, which we've seen, but annual declines are not. Get out of here. Get out of here. Of course, you're going to see an annual decline with the declines we've seen in March and April, specifically in April. But Canadian real estate sales change. I feel like they're pulling at straws a little bit. Check this out. The year-over-year decline is getting smaller as buyers get used to life in a pandemic. Last month, 39.8% decline is substantially smaller than April's 57% decline. That's true. However, it's still one of the biggest declines in history, so don't underestimate it. CREA emphasized this in their report. May's gains constituted a return of only a third of the activity lost between February and April. Could you guys imagine a world where a 1 month 66% increase in sales activity was a bad thing? That's what they're selling here. And yet, it's not good news because it didn't increase from last year when we saw catastrophic drops the month before. Get out of here. The biggest drops in volume occurred in Toronto, Halifax, and Fraser Valley. Toronto reported 4,600 sales in May, down 53% from last year. Okay, so sales are still down. They're still down, but they were down up to almost 70% the month before. So I guess I mean it depends how you're tracking this stuff, right? If you're gonna track year over year on a market that already declined and you're not gonna adjust for that drop that happened, then I think you're cheating. You're cheating. All three of these markets showed smaller declines than the month before. The year-over-year declines for home sales are getting smaller but remain substantial. Compared to a month before, it seems buyers are more comfortable shopping in a pandemic. However, this increase still puts the annual declines at one of the biggest in history. This is true, right? We have seen a huge decline in history, like in a historical perspective. But it says this: as the year goes on, we can expect pandemic fears to subside and sales volume declines to continue lower. However, and then they just throw this in the end: Canada's National Housing Agency doesn't expect sales to recover until 2022. Oh my goodness. Okay, so that's the critical perspective. It's got a rough tone. There is a few things that people are concerned about. If I were to side with them a little bit, and what we're going to see in our next article is, yes, sales are down a lot, right? On a year-over-year basis, they're down a lot, right? We're hitting historical numbers here. We're blowing this out of the water here. However, to ignore what's happening month over month is a huge disservice. Because listen to this title of this next article, which is, in my opinion, a more balanced article. The title's not so balanced. It's highlights the good, but the article itself is balanced. Listen to this title. Did you hear this optimism in the last article? Canadian home sales jump a record 56.9% in May. 56.9% jump. We hit a record, right? So you're hearing the record dropping, but are we hearing the record growth? Canadian Real Estate Association, this comes from Yahoo Finance, by the way. Home sales rose 56.9% compared to April, which is a record monthly increase. We set a record. I don't know if it's a V-shaped recovery, but it's looking mighty close. However, it was the worst showing for May since 1996. There's your historical, and follows a 56.8% month-over-month drop in April. So here's the thing. If you were to just go month-over-month increase or decrease, you would have a V-shape. But here's a little lesson that you're going to learn about investing, whether it's real estate or otherwise. A 56% drop is substantially more than a 56% increase. And the reason is because that first drop is coming from a higher number. And so overall, that as a percentage, you're taking a whole lot more off. But from a percentage-wise growth, we have rebounded in full. But from a number perspective, we're still behind. Hopefully that makes sense. That's why some people will lean towards a more of a balanced portfolio, because the concern is that the drops hurt you more than the increases. That's just kind of the way that it works. It's also a reason why some people will invest that are more risk tolerant in properties that cost more, because as a percentage, when they grow, they're going to grow more. They're going to appreciate more. So this is just factors to keep in mind. But regardless, we had a record increase. A record increase. COVID-19 lockdowns put the typical busy spring season into a deep freeze, but CREA thinks the market is starting to turn the corner. Here's a quote from the CREA senior economists in the press release: with sales and new listings moving down and now back up in tandem, and overall supply still falling, prices appear to be holding firm at this point. Could you imagine if every downturn that we've seen in our past looked like this one? The balance that we have right now between buyers and sellers, and I don't know about Canada in total, but the fact that Korea is saying it probably, but even here in Toronto, it is incredible. It is incredible, that balance, because how is it that prices have not been killed given record dropping in number of sales activity? It's amazing. Korea says sales were up across the country's biggest markets. Sales rose by 53% in the GTA. Now, a senior economist from BMO has a quote in this article. His name's Robert Kavchich. It's entirely possible that at least in some of the stronger pre-COVID markets, listings get snapped up quickly when they start to come back online more substantially, leaving less of a near-term impact on prices. Yeah, and we're seeing that. So not every bank is negative. This economist is optimistic. I even think that Korea is optimistic, but I mean, that depends on who's publishing this article, I suppose. It's a very interesting time. The Canadian market is in general doing pretty good. Toronto obviously got spanked. When you're in such a high price marketplace, we're going to experience higher fluctuation, as any urban center does relative to the rural outsiders, like the Greater Toronto area, for example. But on the flip side, when prices come back up, they come up substantially quicker. So some of these smaller rural areas, if you want to invest in those areas, you're not going to see the same fluctuation. That's often why people want to invest out there, aside from them being more affordable. There's a little bit more of a balance. But when everything comes back, when prices are rising, who would want to live out in bumfart Aurelia when they could be downtown Toronto when prices are going through the roof? Actually, Aurelia is a nice market. I thought bumfart nowhere wasn't a fair comment. Give me a city! Give me a city! Okay. All right. Let's move right along. So that's the news from the Canadian Real Estate Association. That's one of the things we were watching for this week. In fact, we announced it yesterday. We were going to be keeping our eye on it. So let's move right along. And the rest of our market, outside of prices and everything, the demand is stimulated by a number of things. And one of them is this possibility of reopening, which we're going to get to, but also government bailouts and support. Because if you look, when we're looking at some of the articles we've read before, we can see the reason that we're being propped up is because, first of all, people are being given handouts. They're given $2,000 a month. And I think it's 2,000. Yes, it is. And then they're also being given opportunities to defer mortgages. And so the mortgage debt is growing. And these things can become huge red flags, right? They can become big problems the moment that the free money stops. And so every time we get an announcement like this one, it makes you wonder, well, when will it stop? And the question is also, is now the time to make it stop? I don't think so. And so we were forecasting, or we were expecting, it's funny when you can expect money. It's kind of like when you got those rich parents, you get your allowance. Oh, don't worry. Daddy's got it. Daddy will give me money. We literally this week, I just finished yesterday filming a video that's going to drop this Wednesday on YouTube. And this Thursday, we're going to put it on a podcast talking about, we are pretty much guaranteed an extension of the CERB, the Canadian Emergency Response Benefit. And I jumped online as soon as I was done filming it, and bam! There's Justin Trudeau and his sexy self announcing there will be an extension of the emergency relief benefit. And so they said there's going to be details to follow in the days. This article I'm coming from is cbc.ca. The CERB is due to run out. As many of you know or don't know, we had 16 weeks. That was your 4 eligibility periods. And so for, I would say, the majority of people who have applied, that's coming to an end. And Trudeau said, we're working on a solution to extend the benefit for people who can't return to work yet. We'll have more details this week, but for today, I want you to know that we'll continue to be there for you and your family. Very interesting time, because actually yesterday, I think it was a key date, as I'm kind of thinking it through now, because today would be the day you'd be kicking out those small businesses who missed their rent. I mean, assuming in all things equal, right? So maybe this is to give some stability before we finish halfway through the month, but this was an announcement that was made now. We did hear from Treasury Board President Jean-Yves Duclos. He said today, this is today being yesterday, the situation has changed. Since the CERB was first introduced, the economy has reopened in many parts of the country. So there will be, quote, new parameters to the program when the extension is formally announced. He said the program will be adapted to the current context, quote. So It's not going to look exactly the same, but I guess the hope is that it would continue to support the Canadians who need it. There's been a real challenge because we've been fighting, the government has been fighting against businesses, right? And there's been this challenge of how do we unroll or reopen our economy and all of these things, and yet also maintain confidence in the systems that we have and in abilities to pay mortgage to try and protect our markets, right? Real estate and our markets, like whatever the heck you call the markets, I guess the Toronto Stock Exchange, for example, right? So there's this balance that needs to happen, and we're not in a position to just drop the bucket. Now, we do see the government also, listen to this as well. So as it relates to the wage subsidy, so there are 8 million Canadians who applied for the relief benefit and during this economic slowdown, the take up for the wage subsidy program, which floats government funds to employers to keep employees on the payroll, has been considerably lower. So the wage subsidy isn't being fully utilized. In fact, the government cut its projected budgets for the 12-week period between April to June from 73 billion to 45 billion. And they say as of June 8th, the program has paid out only 10.5 billion in wage subsidies. So this wage subsidy is being definitely not utilized nearly what they're thinking, and they brought down their targets. So really the CERB seems to be the big one, right? And now Jagmeet Singh, the NDP leader, he's pretty much said that they're going to give support as a condition of tabling. They said there's a fiscal legislation that has been set to be tabled this week in the House of Commons, and that this is a condition for them to get that done. So they are heavily in favor of extending the CERB. So with the Liberals and the NDP both on the same page, I would think this is all going to happen very quickly. Trudeau also announced I don't know if you've heard, there's a Canada Emergency Business Account, and they've extended that. So the money is flowing. If you're a solopreneur, they call it sole proprietor. Now I sound like an idiot. I was thinking solopreneur. Solopreneur. My buddy De Niro B, he has a podcast. He talks to solopreneurs all the time, people who aren't able to convert into a business they're running on themselves. So check out his channel as well. Great guy. So anyways, there is a ton of money, and it's bad for debt levels, but it's great for stabilizing our economy. But the next question looming, if I was going to kind of go to the next thing in line of the fear in our marketplace, outside of unemployment, which there's not much you could do about other than get them back to work, is mortgage deferrals. I'm not as confident about this one, but I do have a suspicion that also could get extended. Let's see. I'm going to put that in the universe, and let's see what happens. But the momentum in our market is growing so fast. And I think based on, pushing this down another month or two with the speeds that things are growing, 56% in sales in Toronto, this is crazy, that it's going to take a second wave. It's going to take businesses having to reclose, I think, to slow this train down if we give it another few months at this pace. So let's see. You be the judge. Make your investments accordingly. Okay. Then that brings me to the third point, this idea of reopening. And you've probably heard the news. I think this is really big news. If you haven't, get out from your rock. Squidward? No. Patrick lives under the rock. Get out from your rock, Patrick. All right. So all but Toronto, this comes from CP24, all but Toronto, Peel, and Windsor can move to stage 2 on June 19th, according to Ford. The Premier says all of the Greater Toronto and Hamilton area except Toronto and Peel. Ew. I love Peel. I'm a resident of Peel. I grew up in Peel. Can move to stage 2 of reopening on June 19th. And we were actually talking to Mayor Crombie in Mississauga, and she agrees with this. And later in this article, she agrees with this decision as well. So don't look at this as a bad thing. In fact, this is a good thing because outside of these pockets, Toronto, Peel, and Windsor, we have reopenings happening. And if you listen to the numbers, it makes sense. Check this out. Let me pull this up. Where are we here? So in the province yesterday, there was a reported 181 new cases, with Toronto, Peel, and Windsor, Essex counting for 134 of them. So that's a lot. There's less than 50 in the rest of the province. So those guys, they got to get under control. We got to figure this out. So the announcement means activities such as haircuts, outdoor patio dining, shopping in malls, swimming in public pools will now be permitted in Halton, Durham, Niagara, York, Hamilton, Haldimand, Norfolk, and Lambton public health units for the first time since mid-March. And it does seem to be coming from the advice, or at least being backed by, disease specialists. There's this one guy in this article, Isaac Bogosh, that's a hard name, said earlier on Monday the province would probably be wise to wait one more week. So we've got health experts agreeing. And here's the thing. I am good with a reopening as long as there's not a reclosing. If we get reclosures, that's a problem. The problem has now changed its tune as well. You'll notice that they're taking more of a regional approach. In fact, when you kind of ask that question, what does he say here? With York and Durham regions now allowed, people will be literally able to cross single streets from Toronto and go into areas where things like restaurants, patio dining, haircuts, and mall shopping is allowed. Ford said the chief medical officers of York, Durham, and Toronto agree that is a risk the province can take. So it seems to be everyone's on the same page, and it was only a matter of time. We gotta reopen. We can't hurt our surrounding communities that are an opportunity for you to go out and have some beautiful lamb dinner with your friend tonight. And as a result of eating the lamb dinner, all you're going to do is be thinking about me all night. So I was listening to this podcast today, and a guy was talking about slaughtering lambs. His name was Brad's Lamb. Oh, it's terrible. It's terrible. Anyways, I think it's a smart move. Keep the hotspots closed. Open up the rest. And guys, I don't think we're going to be that far behind. I've heard as much as a week away, 2 weeks away. So things are reopening. People are more confident. Showing activity has absolutely picked up like crazy. Multiple offers are picking up. They're rising again, not at the same level, but they're coming back. And guess what? So too are prices. And there's no numbers from Korea that talked about prices all that much. But I didn't care that much because you know what? We talk about prices so much. We are seeing... I think you're going to see bounces. I think you're going to see certain areas doing really well. And I think we've talked about prices like crazy already anyways. So we have a very healthy market, very strong market, at least in my opinion. If you disagree or you think I'm the most biased person in the world, just wait until this Wednesday when we're going to announce this video. I think you guys are going to like it. I had a lot of fun making it because I'm going to try and convince you why our market is one not worth investing, followed by convince you why our market is worth investing. Anyways, I'm going to leave it there. And enjoy your lamb dinner. I'm going to go out there and stain my deck, and I will see you guys tomorrow with more. Take care and keep it real.